Hey everybody, that is the closing bell. Welcome to Markets and Sectors. My name is Mike Fairborn. It is great to be with you all here today. Folks, today I did want to take a look at a few different things. You notice we talked a little bit about this previously, but the market itself did have a golden crossover, I guess you could say. A golden cross occurred, and with that, there can be extended moves. We did see the markets extend moves higher today with news of a trade deal with Japan. I want to talk about that a little bit. And I really want to dive into details on that golden cross. What sectors and what companies specifically might be showing some key strength around that golden cross, which really we can be looking at an intermediate term extended type trend. So looking forward to going through that with you. Joining the chat by a good friend of mine and colleague, Mr. Cameron May. Appreciate Cam being here, helping out. As always, thank you, Cam, very much. And I am privileged to help out in Cam's classes as well from time to time. Folks, it is great to have you all on board with us. Hello to you, Riceberg. Great to have you here. Yep, along with the trading friends. How are you, Lola? We've got Will. Do not copy Scott. Wrong. David, Kelly, Beth, Sharon. Great to have you all here. Any questions, comments you have, definitely throw those in the chat so we can try to adjust those for you. Cam does a great job of that. If things get busier, I need to show something visually. Happy to do that as well. I keep an eye out on that chat for any cues there. Cam did mention also in the chat, folks, you can follow us on X. I know many of you already are. Great to have you on there. We do post financially related content as well as other content as well. Cameron May CS, got to spell it just like Cameron had posted it there and pinned it at the top. Mike Fairborn CS as well. All right, well, with that, let's hit some disclosures to get the show on the road. Information here is for general information purposes only. Paper Money software application is for education purposes only. Investing involves risk, including for some products more than your original investment. Now, we do look at futures charts in here. We don't trade futures, but there are some disclosures listed there, as you can see, for futures and futures trading options. They do involve substantial risk. They're not suitable for all investors. Next slide here, our last slide here. Past performance is no guarantee of future results. And with that, let's get sharing. Let's get started here. All right, taking a look at our markets here, and that is kind of the follow-through we were looking at. We've been talking about this kind of general scenario and setup, really been established for quite some time with the V-shaped bottom that we saw in the markets. Some interesting indications initially around tariffs. Of course, the markets, responded back in that in kind of a V-shaped bottom, taking out all-time highs here. And again, extending into highs today. Now, seeing some strength, just generally speaking. RSI is showing some strength here. I know we're in the bought range, but generally speaking, it is going up with prices and going up higher. And that is interesting to see us break out. As you're seeing that right now, and the S&P closed up about 50 points, as you can see right there. So interesting. Now, I wanted to go ahead and highlight this point as well while we're at it. NDX, that is. The NDX, kind of similar, maybe not the strength today as we saw previously. And so maybe a wider range of companies that were participating in today's movement within the S&P 500 index, but we're still seeing some strength in that NDX. Back to the SPX for just a moment, because what is really helpful too, because a lot of times what we could do is just do a quick comparison. SPX relative to the NDX. So just SPX, just very, very quickly, to the NDX, which is really kind of tech heavy. And we can see what kind of moved on the day. It gives us a really good idea what to look at, what to kind of break down. If the index is higher, shoot, I want to know what tech stocks have been moving in the NASDAQ 100. But we didn't see that today, not like the SPX, as you can see over here, breaking into all-time highs here. So what on earth was it? Now, we're going to dive into some sectors like we always do in this class too. We do like to look at sectors, but we also kind of maybe want to look at specific stocks. Now, there is just a quick way to do that. I'm just going to go over here. We're definitely going to hit sectors, but if I go to Market Watch tab and I dive in and we take a look at some of the sectors, we could see that listed over here. We could see the change. What I'm going to actually do, though, is just go right into the S&P 500 itself. I want to know what was moving on the day. What moved us higher? And specifically, here's another way to do it. What are the sub-industries related to it? A lot of different ways to kind kind of go through this process. But what do we have here specifically? Let's click. We can see that, yeah, the semiconductors, we see a few of those. I'm seeing 1, 2, 3. Oh, there's a number there for you. Down 666 on microchip. Okay, we'll leave that there. Here's on semiconductor, but I'm seeing about 4, 5, 6, about 5 in there in the top 10 losers in the S&P. Interesting. Tech didn't follow through today too, the same way. Now, where were our winners on the day, and what does this mean? Sometimes it's interesting just to see, is this strength coming out of a possible flag pattern? What are we getting from these companies here? Packaged meat and foods. Now, that's a staple. Heavy electric equipment, manufacturing. We're getting into industrials here. There's an oil. It's really a mixed bag, isn't it? Oh my gosh. They're all different, all the way down to about here before you get into some managed healthcare. Healthcare is definitely, the group is in there because you got biotech and life sciences, managed healthcare. But interesting to see, because what's been happening with healthcare? Healthcare, friends, has been doing one of these, trending on down. And could we see we've been seeing some recent strength in that group. In fact, I hit a couple of flag patterns yesterday that I posted within that swing trading class that were specifically in the healthcare group. And what is that? That's more defensive in nature. That's going to tie in later as we get into seasonality here, but we might be seeing some signs of some of the defensive type stocks. I mean, number one on the list today was a packaged food. That's staples. That's defensive in nature as well. That are just kind of popping up here a little bit. By the way, I've got so many companies up here every once in a while, just as a little side note, a little learning note. Many of you have seen this, but this custom expression subscription limitation. I've hit that limitation because I've got all these custom columns in here. We create those custom columns in the ThinkScript class, but you can only really show one at a time in here when you're throwing out 500 companies to look at one shot. Okay, now that was a little bit of background that we saw just from big picture perspective, SPX, NDX, comparatively speaking. I can tell you too that the Russell broke out today. Think in terms now of breadth of the market as we look at this. Smaller companies, 2,000 in there, really kind of smaller based, U.S. type companies. I don't want to miss, of course, we'll go through the full gamut here, the Dow. The Dow, look at the Dow here. I'm going to pause a little bit as we look at the Dow Jones Industrial Average. Folks, we have been at that level, generally speaking. Did we cross since December? The answer to that is no, but maybe just slightly today. That's December of last year. We're talking 2024 still. So 24, we're back in December. Is that potentially a resistance level? Heck yes, it is. Let's just draw a line through here. Again, and then again. There's actually 4 times running. We don't know if we're going to break above it, but we've hit it 4 times. I'm talking like a major level, right? These are like all-time highs. We can just prove that real quick with a all-time high range with a monthly chart, as you can see right there. That could be substantial if we're able to break through. Maybe we can extend higher. Look how many times we broke above prior highs. Now, I realize I'm going in the past over here, but this is back in 2022. Notice when we took out that high, which is a longer-term high, there was a little bit of a rally there. That rallied for, this is a monthly chart, 4 months, pulled back and rallied for another 4 or 5 months before it ended up getting to that same level. So just park that in the back of your mind. What's going on in industrials? The name is there, industrials. Right. So earlier this week, I did highlight a couple of stocks that may be having bull flags in this group as well. I'm just going to pull that up real quick. I think many of you already got this, but just in case you didn't, let me just, hang on a second. I want to zoom in on this the right way. We'll make sure I could do this, and that should work. Let's just pull this up and just see if that does in fact work. It did. Okay. I just kind of pinned this for the time being. And you can see over here, these were bull flags that may be taking shape across industrials and materials. Now, I sent this out on Monday because we were seeing the flags in here, and now we're kind of seeing the industrials themselves break out a little bit higher. I'm going to just go ahead and share this link if you want to check it out. It's a good way just to Well, let's see. I got to click it in the right spot. But if you want to check it out, if you haven't already, there are a list of a few of these in here. Oops, I didn't mean to click on that. Let's just go back to this. Yeah, right here, as you can see. But there are some in there. The key point is I tied this into potential tariffs, which, by the way, we've been talking about in this class for over a month. What have been the impacts on tariffs? Could we come out on a better end with tariffs? Could we be on a level playing field for the first time in, I don't know, forever? The 1940s or whatever? Perhaps, and that could help lift the markets higher. But in particular, industrials and materials, check it out. Some of these have been flagging a little bit, flag type patterns. I'm just going to draw actually just off of this and just kind of show you what I mean. Just like these flags here, right? Flags. Now, some of these we already have some paper trades on, but Ball was one right there. Ball just kind of tapping in to this group a little bit. How did Ball do yesterday? We got a swing trade on that one. Ball actually did break out a day in advance. And so some of these could be extended long-term moves being bolstered by that sector itself. Remember, we're on the verge. This all comes back to we are on the verge. Possibly, we don't know if it'll unfold, but like that's why I said on the verge. Can we break above this long-term range and maybe sort of do one of these things? Break up and kind of hold there. That's a question mark. That's a question mark. I will say one thing, and I know many of you guys will track this, but not every. I mean, you guys might track different volume indicators. This volume indicator with money flow, I'm just going to show you this right here because we do get volume on this indicator with this, and notice these highs over here. So that's a high. That's a high. That's a high. That's a high. Where are we now? We are actually above that level. So potentially buying pressure has come above this high and this high, which is relative. Those are highs that are relative to price highs. And you'll notice those price highs match the same resistance level. If I could just dot this line coming over here to where we're at right now. So technically we could have more buying pressure coming in here. That remains to be seen, right? Because we always want, price action is oftentimes king. I mean, that's what determines the price itself. And so will it go up? Will it, be able to get through this level? That's the real question. But interesting because there could be a driver here with those tariffs. All right. So having gone through that, I'm going to tap into a couple of, let me just see how we're doing here in the chat real quick. Okay. Hey, we're doing fine. We are doing just fine here. Welcome to all of you just joining us again. What we do in this class, we just take a look at markets and sectors. We break down kind of where in this case, maybe where the hottest markets are. And what we mean by that are those that might be showing the most strength technically on the chart. And then also where we might find the strongest sectors. And ultimately within this class, we do top-down analysis. So we go markets, sectors, and stocks. And we just kind of put a check mark on each one and try to do a top-down analysis as to what might show the strongest kind of setups with stocks, which top-down analysis can work that way. Strongest markets, strongest sectors, strongest stocks. We like to put that together in this class. I am seeing a few new names, so I think many of you already know that, but let's go ahead and continue our discussion here on that. Okay, so a couple of cool different things to kind of help us see, even as well as we're still looking at markets here. As we break down different sectors, you guys are familiar with the sector grid that I'll oftentimes share here, right? It's an actual just price chart. And, we've got the S&P 500 right down here in the bottom right-hand corner. And then we've got every other chart, SPX, every other chart that fits in with each one of these 11 different sectors in the market. Now, these are all stocks within the S&P 500. And the beauty of this is it does keep track of the volume on here as well. But we just talked about, industrials, and within that group are materials. So a lot of those kind of companies in the Dow. How are the industrials doing? Wow. Okay, so not too shabby. We've been breaking a little bit higher here, as you can see. Pretty strong trend with the chart. In fact, very similar to the S&P 500 down below, right? It looks similar. I mean, the trend is clearly up. I would also say over here, materials is actually holding up quite well. And keep in mind what's in materials. gold and silver, a bunch of those precious metals in there too. Now, those could be good. They could be good for somewhat tariff sort of situations, but they can also be interesting for industrial purposes. A lot of industrial purposes to, let's say, for example, silver and gold. But they could also represent some risks, geopolitical risks. A lot of time, if those are high, well, then the precious metals will go up too. So those have been kind of interesting to kind of keep tabs on as well. Just a quick note on that. I might as well just share it because we're in there. We did put a trade on this stock as we talked about it in the swing trade class on Tuesdays. This is AEM, and this is one of those that just had, this is one of the stronger gold stocks as you just take a look here, U.S. kind of based relative to the others, and that has been breaking out. So that's one thing you'll get in that material area, the material sector area, and that is some of the gold miners and silver miners. Let me just, while we're at it, this is a small silver miner, smaller cap, but yeah, silver, they have been sort of strong as well too. Let's jump back to that real quick. We'll finish up with that, and then we got a couple of different other sectors to take a look as we go down our kind of inverted triangle, right? Markets, sectors, industries, and stocks on a top-down approach. Consumer discretionary has done really, really well. Let's just put a few check marks over here. So we already looked at materials, looking at the strength right now in the market, materials, industrials. Question mark on staples. Staples today was interesting. Healthcare was interesting, as we saw in some of the stocks that have been bouncing. A few bull flags out there too. Notice over here with healthcare, what do we have? This might be worth investigating as of late. So I do want to do a full screen on healthcare. Before I do that, what else do we have? Communication services, technology, financials, utilities, and real estate coming out of this long trough. So these have been breaking higher. Energy kind of dragging. We've got a number of these. Consumer staples, I would say healthcare and energy really kind of the laggards. Everything else is starting to kind of get moving a little bit. Okay, now let's look at healthcare here. I just want to highlight this chart because what could this be showing us collectively as we look at sectors in the S&P 500? Well, a couple of things. You can see down here, it's sort of a shoulder, head, shoulder. It could be a longer term inverted head and shoulders pattern. Now, we might see that off of this top line. In fact, if we draw a diagonal, oh boy, I drew that wrong. It's kind of like over here. But notice we actually found support right there too. So we did break above a high here, and we tested that, and we're breaking up higher again. Now, the real question is within the healthcare group, because, folks, I'm just going to be honest with you, there could be, in fact, there are what some would consider value trades out here. In other words, the prices have come down quite a bit, yet earnings in a lot of these groups have been kind of strong. And sometimes what happens, not in every case, of course, but value can occur when prices have come down, because like a whole sector's maybe pushed a whole basket of stocks down, and some of them fall just in sympathy with the others that might not have had good earnings. It can do one of these and maybe form a bottom. That's the question mark. We don't know if it's forming a bottom yet. It still hasn't taken out a very, very important high, which could have been something like that high right there. That high. Resistance, resistance, resistance. Can we break resistance again here? Right? That's the question. But how is this looking? Are we going to see a value situation? So in other words, earnings have been, on some of these companies, earnings have been actually holding in there. Earnings have been going up, but prices themselves have been going down. Stock prices. I should just put SP in there. Stock price has been dropping. Earnings have been going up on some of the companies in the S&P 500. Does that give it a value kind of a proposition? Let's do this real quick. I'm just going to see. I pulled this up. I got this from Brent Moore's, a cool chart that he put together, and it does compare. It makes a couple of interesting, cool comparisons here. Where is growth? Where is value? there are a lot of companies that do fall into value here that are in healthcare. And notice what it's doing. It's right at prior highs, but that's the whole basket of value. Now, oftentimes there can be rotations. Now, just a couple of things, because this is year to date. This is the zero line, right? So everything starts at zero. You can see right now, clearly, growth overtaking value. 13.81, real close to 14%. This is above 6% at 6, but less than half the movement in value. Now, a couple of cool things just to note is that when prices have dropped in the market, remember, value didn't drop nearly as much as, growth. Growth dropped all the way down here around 18% or so. But on the downside, this held up much better. This dropped about half that amount. Now it's gone up about half that amount on the upside too. But where value can outpace growth is when there's a rotation from growth to value. Right now we're hitting highs, but we might also see some stocks in the value group start to break out and make higher levels. Now, why would that be interesting? Maybe collectively value is not doing so great, but there could be some areas in value that are undervalued that also have a growth component. Think about this, biotech. Some of the pharmaceuticals can have strong growth. They can act like growth stocks, but they might fall into a value category. These could give you combinations. Sometimes traders will look for combinations. So they might be undervalued, but at the same time, they might be positioning for a breakout or a growth run with a bottom, a longer term bottom. So I just want to throw that out there because that could be the case. Let me just throw out a couple of different stocks here too while we're talking about it. Okay, so these were a few that did come up. Here is Lilly. Lilly consolidation long term just broke the trend line today. Okay, EW. Ooh, that's an example of a sideways company right there, right? And I do actually have an alert set on this if it can take out that level. Let's just see how this looks on a weekly chart. Yeah. So I don't know. We've had a tendency once you get off these lows to kind of jump up quite a bit higher. We don't know. Last one we'll just do. So some signs here maybe of combinations of growth and value. And there you go. Here's Gilead. And it's been kind of sideways for a while. All right. So just kind of breaking it down to the stock levels, kind of going from there. Now, another way that we can kind of parse this too is we can come over here and we can look at another sort of diagram, and this is helpful. What this does, I believe Kevin Horner built this one. I am building on the backs of my colleagues here today, but that is sector rotation versus the S&P 500. So what he's looking at here is the possibility of sector rotation, and what they're really comparing is relative strength compared to the market. In fact, that's what's sticking out right there where it says relative strength. So how are the sectors doing relative to the S&P 500? And that's how you can really distinguish, is there sector rotation? I thought it was a cool concept and a cool idea. Okay, I'm going to share both of these with you so you guys have them. I think they're great to have as we go from there. And by the way, Beth says ball flirting with Golden Cross. Beth, that's exactly, just so you know, you nailed it. That's exactly what we're going to be building on here in just a second. I want to take a look at what companies in the Golden Cross, what companies are showing the Golden Cross more recently or are currently in the Golden Cross within some of these different sectors. And I wanted to take a look at healthcare, and I wanted to look at materials as well. But I'm going to show you guys how we can build just a very, very quick script to help us scan through that. Okay, jumping back to this real quick. What's been weak? Oh my gosh, compared to the market, energy's been weak over the last 6 months compared to the S&P. Remember, the S&P is just flat over here because it's just comparing relative strength to itself. It's a good reference point, just showing us when you compare the market to itself, yeah, it's just going to give us a 1. It's flatlined. We want to compare it to these other indices. All right, sector indices specifically. All right, so as we come over here, down, a little bit of strength in materials though. As of late, there's the bounce. That's going to be a fun one to look at. What do we have? Industrials, possibly, could break out higher. would be interesting to see. Tech's been really leading the way. It's been outperforming the market, no doubt about it. But we're getting some bounces more recently off the bottom, which is fascinating. Not in financials, though, and not in consumer staples collectively. You can see materials, sharp bounce off the bottom. It's going to be interesting to see if we have any golden crosses in this area, which could foretell, and the way some traders will use it, it can foretell an intermediate term trend or a longer term uptrend, something like we had in the S&P 500 that is breaking out higher. So we want to see also, can it get that crossover and can we go higher from there? Okay, so let's dive into that right now and hit it. But hopefully this is useful. Let's just go ahead. I'm going to share this right now, though. Share. Okay, so let's see. Share this grid. There we go. I hit the wrong one. Okay. We'll put this into the chat. And remember, this is not a think script. This is just simply charts with indicators on them that come with everything. So there you go, just as a heads up. Perfect, Riceberg. Okay, very good. Let's see, Riceberg says consumer discretionary and healthcare is considered not discretionary, staples. Did I say discretionary? I apologize if I did. That's a good catch. It's consumer staples and healthcare. Oftentimes will fall into that value category. I don't think discretionary is at all. You might find some companies that are in there specifically, but that over here, back to Riceberg's point, these are made up of these two symbols right here, and this is something that the S&P pieces together, I believe. So it's just $ S&P 500 PG, that's for growth, and PV for value, and they associate different baskets of stocks within each one of those. You know, I do know healthcare is in there. There are some healthcare in there because it's sort of defensive in nature, along with staples, and a lot of times those are value oriented. But not, I don't think discretionary. There might be some in there. But there can certainly be a discretionary that's a discretionary type stock that is showing signs of value. In fact, there's growth stocks that show signs of value too. These are just specific categories of stocks that have been pre-built into them. Okay, let's continue. All right, and Cam's got us covered on that because they're not guaranteed for timeliness or accuracy, and that can be the case as well too. Thank you. Okay, well, let's get into it. I wanted to show you, so let's go back now. We want to look at the SPX, and what we want to do is we want to go over here, and we want to throw on those golden crosses right now. So let's go ahead and type this in. So here's the simple. It's the simple moving average and another one. And we're just simply looking at the 50 moving average. Okay, let's get this so we can see it a little bit better on our screen. The 50, we'll just go ahead and say blue. That's okay. The 50 will be the shorter term, crossing above or is above currently the 200. Let's get these nice and thick so we can see them. And a lot of times I might just put a different style in here too, just to check that out. But we'll do blues and greens. The shorter term one, the 50 will be there, and there you go. And that was the crossover. And a lot of times traders, investors will look at these for signs of not a short-term trend change, but maybe an intermediate or a long-term. Now, did this one work? It did work. And where did it, that's just prices going above there, but it actually, the crossover actually occurred right there, which is interesting because it did also mark almost an exact breakout above an all-time high range. Now, which stocks are doing this? We could scan through a list of them here, or we could also just screen them out too in the scan tab. I wanted to show you today just a super, super quick way to do that. In fact, I'm going to show you that right over here in this add filter. Now, the idea here, folks, is not to burden you with this. I'm going to start looking at this, week to week. But, what stocks are within here? We can easily set something up. I'm just going to go into, so right now I'm in the scan tab, stock hacker, S&P 500. Very important. We want to look in that specifically. And I wanted to take a look at just, say, for example, materials. I want to look at all materials that are currently in that range. They have a golden cross associated with them. There might not be a ton of companies. In fact, how many companies are in here? This is going to show the ADX, but I can still do it this way. Watch. 27 companies in the S&P 500 fall into the material area. It's not a huge list, but if I wanted to get to my number quicker and I wanted to see which of these have the golden cross, folks, add filter, study, click on a little pencil here, and go up top. And what you're going to want to do is I'm going to actually delete this guy right here. I'm going to add a custom condition. And I'm going to go down here and I'm just going to, this is really straightforward. I'm just going to say a study here. There are two studies. First one, simple moving average, just like we were looking at. It's going to be the 50 period moving average. And that's just going to be greater than the 200. By definition, we will be scanning for, and this code within the computer is going to help us do it. We're going to be scanning for just those companies that have that golden cross within whatever industry we want to check out. Simple moving average over here. It was the 200 day right there. 200. Let's just verify we've got it. Simple moving average of the 50 is greater than the simple moving average of the 200, and it's current. So in other words, it's not just the last day, it's happening here and now. Okay. And so we're good. I'm just going to save this. That's it. That's all we have to do. It's very, very straightforward. Let's click on it. Now, out of the 27, how many do we actually have? That's what we're exactly going to look at right now. We can pull that up as we go through this. Okay. So let's do that. Click on scan is all we need to do. So we actually have, there's ball right at the top. We have this one and everything else in here has been making. It's in the golden cross range. So there might be an extended move that comes out of it. Let's just pick out a couple of these. Oh, this is sort of interesting. This is a copper. There it goes. It just moved on me. Yeah, it moved at the top for some reason. Oh, it's got the highest 1 month. Really? I didn't know that. FCX, Freeport-McMoRan. FCX has a golden cross. Do you guys see it? Now, do you see where there could be an interesting support level here? I kind of beat you guys to the chase. I've already got the support level in place. But there's your golden cross, and it took a long time to get there. I mean, this is where we crossed down. That's December of 2024. We just got above it right now. Now, of course, this is not a guarantee that prices will go higher, but it's a longer term price move in terms of the trend, which could indicate that it could actually go up longer term as well. I mean, that's why traders, investors might utilize something like this, right? This is something that we get, as we go through and we look at using ThinkScript. And I just want to highlight this. If you guys are interested, I talk about this ad nauseum every Thursday in the ThinkScript class. We build out a few of these previously. That's not the one I was after, though. Let's just go into that. I'm just going to show you over here into the playlist. There's a good look at Cam. Cam's got some great stuff in here. I encourage you to take a look at what Cam's got. In fact, he's got a couple of these that have really gone viral, which is great. Let me just show you this one. If you do if that resonates with you, if you like the ThinkScript type stuff, I had Brent cover for me last week, and I really appreciated Brent doing that. I'm just going to go ahead and show you what kind of stuff we look at here. So customizing scans, price codes. We did the Arun oscillator. We did divergences, MACD setups. If you like to do scans like this that can be helpful, well, that's just one thing that you could use to help you along the way. All right. So there you go. But that's a very, very straightforward and easy one. And by the way, there is a TOS. Yeah, Robert says there's a TOS scan study crossover. That's even faster. Thank you. Let's just do that one, shall we? Because why make it more difficult? I'm going to go right back into it. Add filter. That's right. There's a pre-built one that we can use. Let's go back into, so we're in the scan tab again, Stock Hacker. I'm going to go back into my pencil and we're going to do a little work. This is going to be faster though, because you're right. It is there. It's a moving average. Study. It's very, very simple. Look at this. Moving average crossover. AVG. I'll just do AVG cross. I think you have to do moving. This one should have everything in place. There it is right there. And look at this. Now it lists both of them for you. Length one, we're going to get the same figure here. Look at this. A 50 and a 200. Boy, that's a lot easier. And we're just going to say greater than, the first one is greater than the second one, or that's just simply a crossover, right? So then we can just click on save. Oh, let's see. It should be is above. I don't think we need that then. There might be some additional functions. I'll tell you what, there are some additional things. Let's see. Average, simple, crossing above. It's all set. So I don't even know if I needed that one. What do you say is true? There we can go. If it's true, and we should be good to go. Ready? Click and click. We should have a total of 10. We've got one. Okay. Well, anyways, we can get through this in other ways. The first one I did give 10. I think that's probably pretty accurate. It did have in there, by the way, just as a quick note, NEM. Boom. Okay. And is it true? It is true. In fact, NEM, which is a gold miner, right there had the golden cross. Let's just highlight that so we all have it right there at our fingertips. Right there. So there's the golden cross. And that was an interesting point. Actually brought us up to this high. Folks, utilize some of these. They can be really, really helpful and interesting to maybe consider. Here is Ball. And, could Ball be one that could trend up higher here? That is the question mark, right, as we go through this. All right. And let's see. That is good. Thank you, Robert, for mentioning that. I'm not sure exactly what was going on, but it did give us at least one of these to take a look at. We could look at, but yeah. So there are some cool and interesting ways to do this. Let's just go back. I think we're good there. Okay. Anyways, does that help you guys? Is that helpful? Get you what you want, and it gets you there fast within a specific group. You realize what we just did? We went in the S&P 500, we picked out everything from materials, and then we did the crossover on it. In fact, if I come over here, I'm just going to do it again. Just really quick, I'll show you the way that I did it before, because I did want to take a look at what was, wanted to pull up also what was happening in healthcare. I'll just do it the old-fashioned way for now, because it was working a little bit better. Let's go over here. I'm just going to go simple, moving average, greater than. You see how fast I can do this, actually. Another simple, 50 and 200, folks. That's it. All done, just like that. Okay, so there we go. We'll click OK. In this case, what I want to do is go ahead and show you, go over into it, and we want to look at industry and healthcare specifically. How many of the healthcare stocks have it? 20 have that golden cross. So think about those that might be have been better positioned for the possibility of a breakout and a move. Oh, by the way, Gilead's in there. SYK Stryker, so that's healthcare equipment. You can see I left the industry on here so we can take a look at it. So is BSX. So let's take a look at Stryker, SYK. Oh, just breaking out right now above 400. Kind of an expensive stock, but maybe one that could be leading the way now. Just for fun, what I'm going to do is put a trade in here. It's very expensive, so all I'm going to do on this guy is purchase like 25 shares. I mean, it's $400 stock. 25 as a possible breakout trade, for example. Now, I'm just going through this just by going through the steps of showing you what it's like to put a trade on. There's the order dialog box, but that's how it could be done. That's how it could be processed, right? Possibility of a breakout. We'll see what happens. By the way, it does have earnings. We don't know what's going to happen there, but that is the break. See the crossover right there, the golden cross, and really closing in an all-time high range? Yes. All-time high range closing price, which is interesting too to kind of see. We also saw BSX in here, Boston Scientific. Oh, could we see a breakout over a very, very, very long range in here? By the way, not nearly as expensive as BSX, right? BSX is not quite to where the other one is, but look at that. And by the way, it did have earnings. Now, was that pre-market or post? I'm just curious how this group's been doing because it might have an impact on our other stock here. This was before the market, and maybe that's what's causing a gap here. Every once in a while, you can see good earnings amongst everything with a number of companies that are in the same industry, right? And look at that. Okay, so a lot of healthcare equipment in there. Maybe BSX numbers could be a positive for Stryker and some of these others in here. We shall see. Just giving you guys kind of some thoughts on how to utilize these great tools that are right there at your fingertips. Okay, well, Before we're done, just one last thing. Let's just take a quick peek at our markets and sectors review. Look over here. What do we have? Advancers, decliners, pretty much in line on the NYSE, the NYSE, breaking higher here as the S&P 500 index also breaking higher. So an indication of potential breadth in the market. Okay. Another indication of breadth. In fact, did we just hit, we may have just closed. Let me just double check for you guys right there. Where did we close at? We closed on the equal weights here, 75.94, 75.96. Very, very close. We're about 4 points away from an all-time high close on the equal weights, right? So that's a very interesting indication as well. So in other words, a number of other stocks that have been behind the scenes have started to get moving. Maybe some of those that we were just looking at now. There's the SPX. No Hindenburg omen spikes. All else equal, a positive there. Wouldn't expect it up high like this, especially with breadth indicators showing strength. And there is a good look at our markets. Markets here in terms of seasonality. Just a final note here on seasonality, folks. We normally run up to about the end of July over the last 10 years. But if we can make this more relevant, you can always make things more relevant oftentimes just by looking at a 5-year. I mean, it's just a more recent. Things are much similar to the last 5 years and the prior 5 years before that. Now look at this. So what does this show? Seasonally speaking, if we're just looking at the average of the SPX, noted in that red line is the average. We don't just go to the end of July. We actually kind of go to the end of August for a rally before we see the September dip. Now, the September dip is true on the 5-year, the 10-year, and the 20-year, and even further, actually. I think you get that September pullback. So that's always interesting to keep an eye on because there could be some weakness, generally as we come into that range. All right, folks. Well, hey, I'll tell you what, if you are finding value in these discussions, do me a favor and smash that like button. It does mean a lot to me. I take a look at that. My manager looks at it as well. Love to have you subscribe while you're down there. Just smash that subscribe button. Love to have you on board. Thanks so much for your help in the chat as always, Cam. Really appreciate each of you, the comments and questions that you've had in the chat. It's great to have you here and, have your conversations operating behind the scenes. So I don't think we had a survey today, so we're all set. We'll go ahead and wrap it up now, folks. I hope that was informative and useful, not just for what we're saying now, but maybe out into the future a little bit as well, hopefully. All right, smash that like button. Folks, see you next time. Bye-bye.